Hello everybody and welcome to our favorite trading day, our favorite trading news event of the whole month, NFP non-farm payrolls, of course, and everyone who trades knows all about it. And welcome to the Mohawk Forex team. For anyone who hasn't joined in with us before, we are true scalpers, scalping on small time frame, 3 minutes, using our boutique axe trading system. And all the information on how to trade like we do, learn, have my team as the mentor to mentor you. It's all on www.mohawkforex.com or in the links below the YouTube channel. So yeah, we've had some nice wins this morning already on the DAX, kind of pre-market and during early London Open, which we don't usually do a lot of trading off when it's NFP day. But too good to be true, so we took some nice trades already. We're now going to trade our small account, which were $50, and I'll just show you so you can see. It's a live account and it's $49.57 is where we're at. And yeah, we're going to go for it. We're going to and I guess as I see markets, it's 1 to 500 leverage. You know, I don't use this chart for analysis. This is just the 50-minute chart that I just has default on here. Everything is done by trading view. I'm just just using the buy and sell. You can see I'm just going to trade 0.01 lot sizes. Machine required there's 4 pence, about 8 cents. There's the margins. You see, I've plenty of margin I can play with on this level. So you've got to practice with a smaller live account. I'm going to do multiple trades, as many as I can, depending on the result. And we'll see how we get on. We're about 24 minutes away. And just watching Bloomberg, I mean, they're full of it again, as always, saying that the result is not going to matter because everyone always knows it's Omicron and it's going to be negative 200, negative 1,000, negative 500, but that means it's a buy for us on gold, simple as. And then what'll happen is, as it does every month, they'll realise they've got it wrong and they'll analyse it and try and change the news to make it sound like they knew what they were doing. We know this pattern every single month, so they're trying to say inflation, CPI print next week is more important, but we know it's not. We know this news event, a lot of retail traders avoid it, trade it as well. And we've got the unemployment figures alongside it as well, which is at 3.9. Again, we could do with everything going in the same direction, private, public sector, and the employment figures all green or red. Hoping the figures are going to be negative. So therefore we will look to take buys on gold, get that initial spike, and then obviously catch the reverse as we are pre-market. Usually we trade the reverse with gold. We go the way of the news, but obviously not with NFP. So we'll try and go the way, but it depends how quickly the news result comes out and how quickly gold spikes up. And if you miss it, if you miss that initial push up on gold, which we've got on the chart here, then don't worry. You wait. Say now NFP came out and this shot up and you hadn't got the result. You know, what you don't do is put a buy in at the top here and then watch it come down on you. You wait. Having a grid system is handy. We wait until it hits this level, and guess what? We take the sell. Then we wait for the bounce and then go back up again. We know the pattern. Every single month it's the same pattern. But don't panic for those people who go, I can't trade it, I'm missing it, I'm not quick enough. Just wait for the retracement and then go back in. Because it's going to last more than one candle, whichever direction. It doesn't just do one candle and then falls apart, not on a 3-minute time frame. So if the news is bad, then we should be able to take some buys. If not, get some sells and then buys again. That's my plan anyway, especially on my small account. And you can see it's on trading view. The forecasted 150, which they've already changed that. They'll amend this anyway. They're saying it's a negative number. They were saying 0 just a few days ago. Now it's negative. So, but the market's priced in this drop. But remember, it could be absolutely wrong. This could be positive.
Like it was last month.
Exactly. So don't just be hitting those buys and sells right now, because yeah, you know, looking at the bigger picture and the Fed and all that, it could well be, but this could be, if the number's positive in any way, shape or form, it's going to kick the market off. So Just be wary. Do not enter any trades until you see that result, because we've all been caught thinking we know better before. So yeah, but like I say, we're trading $50. We're going to go as many trades as I can on 0.1 until I'm absolutely up to my hilt on leverage. Till I get my margin calls. Got a smart stop out at 50%. So if there's a massive spike the opposite way, it will take out some of my trades, you know, to bring my account back into you know, margin. So, you know, it's one good thing about IC market. So I'm going to go for it. Could blow it, could double it, could make $1, 10 cents. I don't know, you know. Usually we make about $1,000, you know, about $1,000 on the big account on this trade. Obviously I'm not looking at that. I'm looking at whatever I can get, really. But gold is sat quite nicely. We saw it break back from a low yesterday right up to 1800 and then push back up to 1813. It's going to break this level here, and then we could be on back up to 1820 once it clears this zone, and I'll break out zone 1815. And again, if the news is good, it'll spike up, come back down, then continue on up. If the news is bad, the news is good, obviously we're going to see it shoot down, up, and then down, coming back, probably shooting down below this 1809, hitting 1807, could come all the way back down to 18 before bouncing again. So we don't know, you know, I'm just giving you the pattern I think is going to happen.
It's a lack of conviction, a lack of confidence that suddenly was regained overnight. I mean, this is the shocking aspect. They all piled in after the earnings report, and I really do question, are we seeing the fundamentals shift enough to justify the shifts in valuation to the degree that we have this week?
You're basically asking, is that earnings report from Amazon yesterday worth 150 billion?
Thank you. That's
in the pre-market,
yes.
In market cap. Is it?
I don't know. Is it? I mean, I guess we'll see. We're seeing right now it fade a little bit ahead of the open. But how do you value the fact that they are to charge $20 more per year for a Prime membership? Does that give them $150 billion in market cap?
I spoke to Mark Kiesel earlier this week of PIMCO. Do you know what he said, Tom? We're holding more cash. We're holding more cash because we think this is it. We're going to see more of this, more volatility, more dislocations, and we want to be in a position to take advantage of them.
Amazing that. Facebook has the biggest one-day loss in the stock market history, and Amazon has the biggest gain next day. Crazy. So how crazy the markets are at the moment.
Spotify lost 15% yesterday.
Yeah, more because of Joe Rogan.
Yep.
But yeah, Mark Zuckerberg lost what, 36 billion? 36 billion in one day, his own personal finance. And then you get Amazon, how they say, 120 billion. So let's see.
Pushing 93 earlier.
Brent.
This market's wild. Futures up 0.1%. Brent now 92.77.
Wow. We'll be trading oil with the NFP. And what I've done, I've loaded up Forex Factory as well, because there's definitely a fault with my FX book at the moment. They were printing the wrong result in the corner here, and obviously as you can see here, look, they're taking the time to load up results, so real shame, because usually we really rely on FX. So I've loaded up my Forex Factory account just as a backup. You see here we've got NFP, yeah, earnings, employment rate. So again, they're saying 110 on their report, opposed to on 150 on, or whichever way, it's the same direction. So we might stick with my Forex Factory for the result. Like, it's been a bit glitchy. Whether it's manipulation, whether it's a fault with the account, I don't know. If on the app, I think on the phone app, it's okay. Obviously for YouTube, I'm going to stick with Swamp.
The phone app did the same thing last time.
Yeah, I know. But yeah, it was printing the wrong colour. It was coming out green here, so you're going, hey, better than expected, and then it was printing, it was actually worse. So it was, really could lose people a lot of money. It was really dangerous. DAX had a massive sell-off. Look at this. I mean, we caught some buys on the open, then we took some sells, caught some buys on the pushback here, We thought that would be the start of the W, the second leg. We thought that would start here. Obviously, DAX had other ideas and broke our blue level, formed another one, smacked that out, and again, we're still waiting for a... On my big account, I'm in some buys on this already. I cleared quite a few nice little pullback buys, but again, this is going to be dependent on, this will be affected by NFP as well, but it's such a big C. Yes, and then down. RSI just, you know, dipping below again. It came out of the zone. Here was the time to buy. This is where I bought. As soon as it hit this bottom level 15, I got in on the buys, took some drawdown, came back, and again took buys here. Now obviously if RSI dips down, we're going back down, but again this is a heavy support zone, so I'm not too worried about this. All the way back down here, I know it's going to have a good chance of pulling back to 1528. Post that into the group because that's what I'm waiting for on DAX on my other account.
Is it the industrial production that dropped DAX?
No, I don't think so. I think it was just because the construction news was good. Look, construction was good. The Euro retail sales were low. It was already dropping way before that. Factory orders were good. That's why I took some buy. So, yeah. Guess there's a good result on that one. There's always a reason, but I didn't really look into it. But I just followed.
That's the second time. That's the second time that DAX has hit 15.5 and just massively sold off. So I've seen here recently. Yeah. So 15.5 is a hell of a resistance area.
Yeah, and that says there on our chart, heavy. There you go, heavy resistance. So, like I said, I caught a little buy there, and then caught the sell on the way down, and re-entered. Again, this could be all to do with the ECB saying they might. Excuse me. Might. Thank you. Might do interest rates. You know, obviously the Bank of England rose interest rates to 50 basis points yesterday. You know, and then today, oh my God, the Bank of England. What did he say? He said to everyone, "Don't ask for pay rises." A non-elected he's non-elected governor of the Bank of England. He said if people are worried, you know, want to help or whatever, don't ask for a pay rise. And it's caused a massive shitstorm, that has. That someone like that's come out with, they're on about it on Bloomberg, saying it's outrageous. You know, they think one, they shouldn't put interest rates up, and they're on about putting up to 1%, doubling it by June. And people are going to just feel that really big time. So I don't know, but to say that to people, don't go asking for pay rises, because obviously people will need it to afford the extra money and the inflation and stuff. So, but they're crazy. And then you got them having a go at Powell, and then the ECB saying, you know, they were saying net zero interest rates, and now they might. Businesses most influential and instrumental. And that's the way you run good risk management. Gold, look, there we go. Oh, look at that. Now what do you think we want? We want news to be better than expected, because then we can get this. I'm going to load up this anyway and say it's NFP. Bang, bang, bang. Got 10 minutes to go. Not saying this is going to be the result, I'm just putting my arrow on the chart and waiting, but look at that, that's a double top of anyone's money.
I think what we're seeing during this period of time is that communicating via video is not a fad.
And usually, you know what I mean, you'd be looking to take sells, but obviously not at the moment, and RSI is just broke. Again, I would be jumping in on a buy. Well, I might be possibly, if it broke here, taking a buy up, but not at the moment. Don't be caught in any trades while we're waiting for the result. And so we've got 11 minutes.
Not since the 1980s have we seen these sorts of reversals.
Bloomberg is fastest with the numbers and analysis.
The fundamental story is really solid.
It's really kind of a balancing act.
Bloomberg,
Moving the markets. Hawkish ECB, you see. Hawks and doves.
The US
Amazon's too good to be true. Payrolls, here we go.
There's been a temporary shock going on.
Danny Blanchflower there.
Wait for a gain of 150,000. Oh, it's going to be a shock, man. It's going to be a shock.
NPC member, not sure what's going on this morning. Tom King, Lisa Brown.
There you go, Euro rises, hooks. By ECB.
On the S&P, there we are. Nasdaq futures up 0.7%. Yields down 2 basis points at 181 on 10s. This market's really interesting today. If you strip out the Nasdaq, S&P's barely in positive territory.
Yeah.
Take a look at Europe at the moment. Stocks are down hard in Germany by 1.5%.
Yeah.
Look at what's happening in the Italian bond market too. I'm just speaking to an investor on the Bloomberg terminal right now, and they are fixated on what's happening in European fixed income. Crude's positive 2, up 2% to 92. Without this Amazon move, Tom, and with the Nasdaq where it is, we'd have a very different feel, I think, for a lot of people waking up and just having a look around.
It sums to me in the VIX at a 25.19 is not a 21. It's halfway to that 30 level, which is a benchmark for the Gloom crew. BramoCam keeps there's a little meter on the side of the BramoCam that keeps track of the VIX. 25.19 right now. Jeff Rosenberg's going to join us after the report. We've got Ira Jersey scheduled on fixed income dynamics and on the equity market. Gina Martin Adams, I believe, scheduled to be with us right now on the fabric of this nation and its labor economy. James Glassman joins us. Jim Glassman, head economist, JP Morgan Chase Commercial Banking as well. Jim, we always show up, but we've never showed up for what an odd report. What are you learning in your context with business for Mr. Diamond's Bank?
Well, it won't surprise anybody. The number one issue for everybody is can't find workers, having to pay more for workers. They're very concerned about it, and a lot of people think, is this the making of a new inflation problem? Assuming we get these bottlenecks behind us.
That's the problem, isn't it?
I think what people are missing
there's positions out there, but people are not taking them, so people are having to pay more to keep people in jobs.
The result is they're much more efficient.
Yeah.
If you're more efficient, it's releasing.
That's what it sounds. That's what's.
However you want. So I think what's really stunning, I hear the
Yeah, I'm watching the same thing over here. It's Bloomberg surveillance.
What's going on in the U.S. Pay is rising much more rapid, twice as fast as it was. Profit margins are also rising. And that tells you we're in the middle of an innovation moment.
Critical question, and this goes to Jim Glassman's decades of work on America's productivity and this new productivity. Jim Glassman, is Amazon and the others, are they simply on a path to $20, $21 an hour?
Probably. I mean,
crazy.
Look, everybody has shifted. Everybody's learned that online activity has got a lot of benefits, and so Amazon is this event is accelerating the shift away from brick and mortar to online, and they enjoy, when this kind of thing happens, Amazon just can't keep up with it. So I think that the pandemic is just enhancing their ability to pay more, and workers, and this is why people are competing with Amazon. If your manufacturing operation happens to be near a distribution center, you're competing with Amazon for those workers, and that's helping to drive pay to higher levels.
Jim, perhaps it's driving pay to higher levels, but it also might lead to a participation rate that stays low if you're talking about automation and the productivity from basically eliminating the necessity of some jobs. What's your view on the participation rate in this new productivity wave that you see?
Well, because of the demographics, it's been declining over time, right? But the pandemic threw us off course, and I think what the pandemic did is a transitory thing.
If the news is worse than expected, we could be up here. Could be up here.
We're over 65, but most of them are younger. And when we were providing the support, the federal government support helped.
Is gold gonna smack at 18? Obviously, if it goes up to here, 18, 19, what are you going to do once it hits this? Get some sells in, and then wait for the rebound. If and it could be a big second leg drop then.
The fact that companies
dropping off now. Look, you see coming away.
An added incentive to get people back in.
Is it going to be a buy for gold?
See a lot of this come back. The problem for the Fed is
that's right.
Unemployment, but they don't. There's uncertainty about how
coffee gone up my nose.
This is going to be happening, and I think the economy has done enough.
It's going to be an interesting report. This very interesting.
And that's why we are where we are.
Hey Jim, forgive me for jumping in. We got to go. It's good to catch up, sir. Thought you were done. Right. Jim Glassman there of JP Morgan Chase Commercial Banking. Thank you. More calls on the ECB. This from BNP Paribas. The ECB left the door wide open for rate hikes. They now expect 25 basis points in both September and December. a further cumulative 50 basis point hikes of next year, taking the depot rate to positive 50 by the end of 2023. So that's 100 basis points worth in around about, what, 18 months? Over a period for them of less than that, Tom. At a time when we came into 2022 looking for nothing from the ECB, so we've reset there, and we're resetting in markets in Europe, Tom, in a big way too.
I mean, I know we got.
And that's why the DAX is selling off, you see, because now they've decided to they're going to move interest rates, and they said they weren't going to do anything this year, so that's why DAX has sold off. Always the bigger picture. But I try and say to everybody.
But that market,
you got to keep your finger on the pulse of what's driving price.
I just wonder how this
That's why I've had this, and that's why it's on heavy support now, and any pullback is just going to be a center W, maybe. I thought this was it. We've got our trend line, it broke. So if you was in a buy here, this is where you get out. Once it breaks that level, here's where your stop loss would be here, but you'd be out before that. RSI's poking back up, so it could bounce off this. We could get a little bit. It's not going to go any harder than that 15.28 at the moment. Depends on this news. 4 minutes to go, everybody. 4 minutes to go.
We've seen a contained credit market in the U.S. In Europe right now, there is a move that's particularly significant and is getting people's attention.
Getting our attention too. What is not getting our attention is a number that drops in 6 minutes' time, and Mike McKee, there's good reason for it. We have had guest after guest get freezing cold water, ice cold, and just poured it all over the payrolls report that comes out in 5 minutes. Mike, are you one of those?
Yeah, I was calling this perhaps the most interesting but inconsequential report in years, because there's so
Right, let's see what happens then. So the market's not going to spike then, Michael McKee.
No, that's what they say.
I know, I love it. It's like, you what, this could be probably the biggest spike move we've seen.
Looking forward to your
I love it when they say that.
Hot seat, TK, ready to lead us through it. The number drops in. Where are we? 4 minutes away.
Well, we're going to go beneath the headline data. What matters? And I'm with Lisa here, John. I'm sorry. It's about the wage dynamic that we'll see. And I understand Mike will be way better on this than me. But, you know, what I would state, John, is it's 7.3% inflation next week.
Wow.
Real incomes in America are not only negative, but big negative, and have been negative now for a longer and longer time.
Jobs will be ugly.
With your conversation with the Secretary of Labor.
It's tough to spin. At least in many ways, the payrolls report, if it's a really rough number in 5 minutes, that's easy to spin. But going into next week, 7 handle on inflation. Crude right now, 92 at the pump. Prices going higher. It's a difficult moment.
The spin zone's over. It's now, what are they going to do about it? What kind of proposal can they put forward to make their agenda?
We are 4 minutes away. Your payrolls report in America just around the corner. Michael McKee is going to break that down for you. We'll whip through the price action and get the view of Jeff Rosenberg of BlackRock from New York City for our audience world.
When it comes to trimming your balls, you gotta level up.
4 minutes to go. 4 minutes to go. Let's see. Average earnings, unemployment rate. Obviously, if this is negative, I know they're saying negative, you know, this is what the general consensus is around the 0 to 150. So if this is higher, imagine if this was 160. Oh my God. So we just don't know. Both up to 150, so that ends up being higher. Take a sell, and we'll go. Few minutes to go. Set. I'm on 0. I was tempted to go higher, but I'm not. I'm going to stick with 0.01 and just see. Let it spike and just try and click as quick as I can into the green. Or is it red? You know. You can see gold is set up actually quite nicely to make a big move. Right where we need it to be. There we could see a line. Yeah, I wonder if it'll get as high as that zone here. Sell, we feed back down right here. So here's what I think range could be. I think it'll break the, even if it's just a spike. Could sit around this level here, might spike down to there. could end up coming down here, but that's a sensible kind of range you could think that it could go into. You've got areas where you can get pullbacks, get retracements, danger areas where if it breaks, it's going to continue, breaks, is going to continue. This is it. 1 minute to go, everybody. See what we can get. So as we know, gold will move 10 seconds before the result, because they know and we don't. But again, that doesn't mean you enter the trade. One, you probably won't be able to because the spreads will go crazy and your broker will glitch out on you. But okay.
Sitting solid at about a 2-pip spread on gold right now.
Highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus.
If it comes out on my FX book enough or not.
Various studies show that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is
drop.
What are the effects of mix and matching?
There's the pump. Look at that.
And what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron? Because as we know,
so you don't
many parts of the world
jump in, you can wait.
And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes.
Still waiting for the result. Look.
To look at large scale data of the ability of antibodies from
dropping. Look at that drop. Beautiful, beautiful.
Grateful here today.
Is it going to be a continuation? No one's printed it yet. You got a result yet?
It means that all of the vaccines
no.
Which are designed with spike in
there we go. Oh, look at that. Better than expected. That's why it's sold.
So I think that is the best news that we got from all this.
Wow, look at that. You got it totally wrong. That's why they got it totally wrong. Look at that.
Exclusive interviews with the most influential figures in
amazing. Look, 467.
Terrible thing. Inflation you could tolerate.
This is going to be negative. Brilliant. Oh my god. Oh my god. Yay. We've done it. What did we get? What did we get? $11.51. Brilliant.
There you go.
Oh my god. What an increase in the account. Perfect. I took 3 sells on gold. And brilliant. 3 sells on gold. Perfect. Look at that. I love it. There we go, just to show you that was alive with my live $50 account. There you go, look. Just got $4.99, 10%. 10% on my account. Brilliant. And that's just on that initial move. I'm going to go back in again, but that was on the sell. And why did we sell? We sell because the news was better than expected. And look at that. Where did it hit? The zone that I...
1800.
Yeah, to that zone that I said. It's going to drop again, and then we'll wait for a retest. Listen to what Bloomberg... Look at my FX book. Look, how rubbish is that?
10 seconds away from a highly unpredictable...
Let's see, because they're lagging behind.
Just about to break. Futures up a tenth on the S&P, on the Nasdaq up 0.8%.
Look at that, look at that, look at it pushing.
2 basis points on 10s to 182.
NFP amazing.
Up 2 basis points to 122. A sell-off in the European debt market as we wait for the attention to shift from Europe, and the commentary from ECB President Christine
Lagarde. How are they going to justify this then? They got it wrong.
Here in America.
Yeah, they printed 199.
John, 467,000, and that's a plus sign in front of that number. 467,000 jobs created or restored in January. The unemployment rate does tick up to 4%, but I'm going to guess, I have to look at the details, I'm going to guess
they got it wrong. They got it wrong.
The labor force. Just an astounding number given the fact that 125 was the forecast, and we had people who were expecting negative 400,000. Let's take a look at some of the numbers here. Unemployment rose for
brilliant.
Adult men and white.
Look at that drop.
I'm looking through all
Look at that. Look at the drop. Look at the drop, man. Beautiful, beautiful.
The biggest miss in history. Mike, take your time and give us 3 nuggets.
You know, I'm wondering what the folks at ADP are thinking right now.
Yeah, ADP got it right, didn't they?
Let's tell you that stays at 62.2%.
See if this pushes down and see if we can get any more green.
So I think they may have revised that. Although it doesn't say that immediately. Average hourly earnings on a month-over-month basis up 0.7%. That's a huge gain.
There we go.
Hit that bottom level, and then it'll pull back, won't it? It'll pull back up.
Would have lost their jobs in the low-wage industries, but that may not have happened. Pushes
come on, icy markets, let me in.
to 5.7% on a year-over-year basis.
10%, brilliant though. 10% in one drop. So if that had been $1,000, you've been $100. $10,000, $1,000. You know, one trade, straight in, no messing.
Number today.
Unreal, Mike.
Go ahead and tell us what the markets are doing, John. I'll look at where the breakdown comes.
I said to Bramo coming into the number 500.
Yeah, we've got another 22.
Negative 500. So we are at 467. Look, the attitude towards this jobs number this morning was basically if it's bad, ignore it, and apparently if it's good, let's go. Yields up at the front end by 7 basis points on a 2-year. We'll see if this move
NFP.
sticks. We haven't
Let's see if this is gonna. You know what's going to happen because it's pre-market. We're going to get the pull up.
There at the back end by 5 basis points. So this curve is just a bit flatter, but the whole curve is shifting higher.
That was an easy one. I hope everyone got a sell on gold. If not, I don't want you part of the team. Honestly, if you miss this trade, honestly, if you're working, whatever, you've just got to take a lunch break. You know what I mean? Nip to the low because it's just such an easy trade to get. You know, we saw the move and it was a continuation. It's just, you know, when the news was that far adrift from, look at that, no FX, but still not printed. Here we go, finally. There we go. Everything was green. This is what you want. Everything was green. So therefore, you have to take a sell on gold.
Real regime. Mike, do you have any wisdom to say here?
I don't know if it's wisdom, but I'm looking at the categories that expanded.
My FX book says 510,000.
And it does seem, and I don't want to throw.
Yeah, that's the revised. They revise it.
Revised from a previous value of 199.
Yeah.
Fucking nuts, dude.
So they're saying they got the previous month wrong. Anything to try and skew the figures.
Yeah. Okay.
This is the figure. Everything was green.
Retail trade employment rose by 61,000. General merchandise stores up 29,000. And building material.
So they got it wrong. So let's hear him eat his words now then, saying that this is an insignificant report.
Transportation and warehousing.
Bullshit.
Hired couriers because we were ordering online, but jobs went up 54.
Right, I'm waiting now for the buys. So for you guys who've missed out and say, oh, I've done with NFP. No, look. Our Act system will tell us when it's time to buy. We know when we get down to 14 and below, we're looking not to do a continuation. We're looking to go reverse now.
Manufacturing jobs were up by only.
Because remember, on the open, we will go the reverse.
Down from 32,000 the month before. So there's some odd things in here as we expected, but not in the same way that we expected them. We have to mention too.
You didn't expect any of it. You got it wrong.
In which they revise a lot of the data for benchmarking, and it does show that we have some changes in that area that people have to in terms of the overall. Look
at his face. Look, you can tell he ain't got a clue. It's so funny. Oh, we got it wrong. So tell you what we'll do. We'll amend the figures to make it look so it's not so bad to 510 from
162, 294 in December, and those numbers are not comparable because they add in. So that does affect what happens with the unemployment rate and the participation rate.
This is the game. This is the game, and this is the response from Neil Dutter of Renaissance Macro. This will get your attention, Tom. Here's the quote, and on Twitter. Revisions surged 709,000 over the last 2 months. January beat while expectations were heading south going into the report. The Fed is looking increasingly wide relative to the data flow. You cannot rule out a 50 basis point move at the March FOMC. Not my view. That's Neil Dutter and on Renaissance Macro right now.
Crazy.
He's a BlackRock. He's a BlackRock portfolio manager. You can't trust anything he says.
Others that this is an arcane science and they don't know what they're doing. This is really, really difficult to do. We're in a natural disaster. It's all original. John, with the revisions, I've got a 1.1 million job formation statistic. And that's just absolutely extraordinary. John, I want you to bring in Jeffrey.
Yeah, see, they just didn't have a clue. What did I tell everybody? Yeah, everyone was saying it's going to be negative, negative, negative. You know, but
study on the most stunning miss I've ever seen.
That sounds perfect. This is a monster upside surprise. 467 is the number. 125 was the estimate, but the range was huge. 250 at the top end, negative 400K at the bottom end. Wages look fantastic. The 2 years responding. Yields higher there by 9 basis points. We approach 130 on a US 2-year.
John,
well, I'm happy with my 10%.
I just want to jump in with
Gold's pummeling down even more now. Let's see. Is it going to break this? Like I say, we're looking for buys, but not yet. We wait for the signs, which is if it hits this, if it breaks this, we're going for more sells. I'm waiting for the curl on the RSI, as you can see there. So it's all nice and smooth. You know, I don't know why people panic. Look at this drop.
1797.
It's not just that there was a huge gain this month. There was a huge gain last month as well.
Brilliant, brilliant. Scored some more. I got 2 losses, that's all. Look, here we go, look, here we go. Ooh, there it is. There's my NFP trading today. $5.64 from a $50 start, so I'm over 10% just on this trade. These two here were just because I didn't close out. I lost 43, but then I won it back. Look, so there we go. So these are all sells, sell. I've not taken any buys yet. That's great. I mean, to win 10% on your account in one trade, why would you avoid it? Why not you try and learn how to trade it? You know, I'm not saying you risk your house on it, but at the same time, you know, we win 10% pretty much every time we do NFP. But this is thanks to our Axe trading system. This is thanks to this, you know.
In terms of those revisions, as well as what it's saying today, this is the labor market really screaming, I should say. And that's going to continue to keep the pressure on the Fed. And that's why you're seeing the move in the front end, because the market is pricing this acceleration in near-term tightening. And I think that will remain the theme here for a while.
No, looking for pullbacks.
Does a lot to continue to accelerate that theme of upfronting the pace of Fed hikes.
It's hitting that heavy support, as we said.
I don't know if that's necessarily 50, but it's really about how quickly do they get it in this year, and a very rapid change from, you know, expecting a quarterly pace to now, you know, it's going to be every meeting, to Neil's comment about now they need to throw in a 50 in there. But definitely here the surprise is that this is just again telling us how overheated this labor market is.
Can you put this report together with what we heard from the Bank of England?
It was quite good. I think my Forex factory was way faster this time, wasn't it?
As globally there is a feeling that the labor market, that in general inflation is getting too high.
They said the employment rate was, look, they see what I mean, like how the different figures. They said it was worse than expected. Whereas
well, there's still this distinction. You know,
they're saying it was 5.7. It was
Bank of England and the ECB. We heard a lot.
It was employment was. Oh no, they say 4 as well. Yeah, so they said the same, but everything else was green. Right. Okay. So they did sync up. I thought there might have been. That's good.
Will very much sit at the
this way it is. All green means we sell gold. We know that.
To be seen. I think what you're seeing here in today's report for the U.S. as well as for the Bank of England is that the strength.
Just keep watching gold because we still want to get some more trades. RSI is 11 now. Again, if you want to take a sell, very risky because we can still, you know, we could bounce off this level or we could come down to our heavy support of 17.95. So we could adjust down to here.
Disruption narrative to something that's much more.
This is great. What a result on NFP. Amazing. What did that guy say? It's insignificant to the market. Nothing's going to move.
Yeah, right.
You gotta love it.
This on a day where we really consider finally a positive rate regime across most, if not all, of Europe.
You got to find the bottom before you get in there. It's dropping again. Look, pushing again. RSI is 12. 1 minute 50 left on this candle.
To the overall financial
I love it. I love it. I get such a buzz from this. It's great. Bearish 81%. Daily volume's already 50% before New York Open. We're declining. Bearish and falling. So everything is saying this is still a continuation.
Is it a slow migration or is it a non-linearity? The Fed doesn't like non-linearity.
See if we get another push down.
Deal well with non-linearities. That's too rapid of a tightening on financial conditions.
I'm happy with that, with my result.
Conditions, but it doesn't want to crash confidence and over tighten. So it's a very tough
The thing is, even with that, you've still got a good margin. You know what I mean? You've still got a good level to work at. You know, that's a good thing. You've still got plenty of margin. You can do 2 trades with a small account and still have plenty of margin.
Accelerating out of control, whereas in their forecasts and the market,
Hey, I got another 25 cents there nipped in, so I'm up to $5.84.
Surprisingly, NFP dropped US 30, NAS, and the S&P.
Look what it did to DAX. Push DAX down. Again, there's no buy on DAX yet.
The challenge is, can you exit that
and US 30.
A bigger financial tightening, a bigger financial accident. Clearly, that's what the policymakers are going to be aiming for.
Wasn't it smaller? Look at that. It's hardly anything. Pushed it down. To here, you've got to wait for the buys. The buys are going to come. If you're trading US 30 for the open, you want to be in on the buys. Sat on support. The news was good. This is nice manipulation. Scared of the market. And that's why we trade gold, because look at that. You just don't get these moves on the indices. Because it's pre-market, remember. It's not open, so...
Are we betting on interest rates going up or interest rates going down? That's a very different
RSI is 11.
set of tools. But
We want to wait for it to pop out.
Here that is quite advantageous to a different tool.
It's got a red trend forming. There's gold going to hit this 1795. And we know gold is going to go back to 1800. This is the great thing. We just, you know, if you trade in a big account, some people have been loading buys in now. We haven't reached the bottom yet, but you know, we had the same scenario yesterday. The slow climb back up here. Look. This is where we could get back down to, look. See? Could be here. Could be 1788. It's going to do it all in the next 45 minutes. And then it could drop again. We could have a pull back and then a drop again.
A bit of glass half empty, glass half full there.
For those of you who think they've been living in the real world for the last 2 months, you haven't been. Omicron did not happen. 467 is the number for January. The previous read, 510. Lisa, this stuff is just unbelievable just to get your teeth into. We were told repeatedly this morning, ignore the payrolls number, big Omicron impact, and then bang, yields exploding up 8 or 9 basis points to 128. I'll discuss this with Jeff's colleague a little bit later, Rick Reeder of BlackRock. Talk to him about how on earth he's handling this situation, just the cash allocation. I wonder how large that is at the moment. Anastasia Amoroso will join in, Mike Collins of PGIM too, and then later we'll catch up with the White House. I imagine, Lisa, the interview that Secretary Walsh thought he was going to do yesterday
it's very different.
It's a different one to the one he's about to do now. I thought he was about to tell me all the differences between the household survey and the other survey and why this number was so bad. And this is going to be a different one in about an hour.
It's going to be one about inflation. It's going to be one about a labor market that looks increasingly tight. I keep going back to this idea that the European market right now is really in shock still from the ECP's pivot yesterday. Why has the U.S. market not reacted? It looks like the reaction is coming today. Jeff, do you think that there is more to come in terms of this recalibration of, as what you said is, we are moving to a new regime?
Gold, here you go. Here's the push up on the RSI. We've now got a resistance zone, blue zone, that will become support, we hope. Let's see if this pushes up.
Around the pace of how quickly the ECB has to move. You know, there's still a lot more, as Lagarde said yesterday, a lot more data dependence. And so you saw the first crack in European inflation data, right? So
if we get a little push up on this, it's found a nice little level.
Forced the ECB off of the somewhat conditional promise
of
rate hikes. They've been kind of mugged by the data, mugged by the reality that inflation there is rolling. Now
it's fighting again.
Underlying
Like 10 minutes till that nice little pivot we get as well before the open.
So I think you saw less of a reaction in the U.S. relative to a very strong reaction.
Still volatile. Look at that.
Again, in that cross section, where was the biggest reaction? Jonathan mentioned it earlier, the spectacular increases in Italian yields, because in the cross-section of European central bank support, it's compressed. It's muted the fundamental.
Still think gold's going to tip 1795. Look at the RSI fighting. Look at the RSI. I love it. 16, 15. He wants to go for it.
We're going to see a lot more in the cross.
It's trying to fight.
To the ECB, but it is very much part of what I think we're going to see reemerge as the ECB.
Yes, got in there. Brilliant. What did I get? Yay! 47. I got 70 cents. Hey, 658, 48. Here we go. Look, scalping the NFP with a small account. They say it can't be done. Well, there's the proof. But now we're, you know, like 12-13% up for the day.
And the labor economy. Here's what we're going to do. Gina Martin,
we're at $56.
Ira Jersey in moments, but I want to go to Mike McKee right now on wage inflation. I just did a fancy Bloomberg study.
There's all, and these two trades should have been wins, but it was just a case I didn't click out quick enough and I got the spike. But look, everything else is bang on. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades, 2 losses. Perfect. And they're the first buys. That was the first buy there. Look, just one buyer put in. Relate this to a bigger account and you can see the money you could be earning from this. But you've got to know what you're doing and practice. There's the doji, there's the candle, there's the price action.
Give us a window into that before we get to Ira.
We had that 709,000
Zoom in, see it.
jobs additional from the revisions to November and December. But you go back and you look at what they have revised previously in 2021. The number for June is 405,000 less than it was. The number for July, 402,000 less than it was. So these numbers are kind of offsetting. And
is this the bottom?
We're seeing when they break down the jobs that they added back in this 709,000.
You're down again. So it's against that resistance, isn't it? It's trying. We don't want to wait for the RSI to push out of that bottom zone.
Pushed up this on a 1-month basis, so they're going to have to wait and see the next month before they get a better idea of the trend in wages.
My head's spinning on a Friday, frankly, Mike, with that conversation.
Everybody just clicked when I was talking. They're clicking off the TV.
Mike McKee, thank you so much, and he'll be giving us much more value on this through the morning. Ira Jersey with us on the bond market. Ira, when you look at the continuum across BTMM, the deep liquid money fund of this economy, off the shock of this labor economy, what do you look at in your bond world to give you information?
Yeah, so it's the shape of the yield curve at this point, and will the yield curve continue to flatten?
See, try to curl, hit the resistance, didn't do it. That's why I got in and out really quick. Because again, this is now a resistance zone, and look, you can see we're pushing down. Are we going to 9? Is it going to break this? In which place we can get another sell down from here to here? Look, 10, 17 pips. Still good.
Reevaluate after some of these numbers, but you know, some of the information that Mike McKee just pointed out, like with the back revisions from prior years, might not take all the sting out of some of this data, because when we look at things like aggregate labor income, so the amount of jobs times the hours worked times the hourly earnings, that is still growing at a pretty decent pace, and suggests to me
took a 10 cents loss there. Damn, didn't get out quick enough.
As inflation
back to 634. We're still up. We're still doing well.
More sustained than we thought.
But Lisa,
not bad.
Your work, labor participation,
we'll catch another sell.
The needle moved.
Yeah, which is sort of surprising considering the fact that a lot of people expected workers to remain on the sidelines. I'm looking at some of the moves in the market as we have parsed through the details.
RSI 15. Is it going to dip below that 15 level?
Highest level going back to mid-year 2020. Ira, we heard
real shock to the market, you see. 72% still bearish.
Hotter than expected or other economic data, he would consider a 50 basis point rate hike in the March meeting. Do you think that that's more on the table now than it has been?
Well, I certainly think that the market's going to price for that possibility, but I don't think that ultimately the Fed will do that. I think it's much more likely that the Fed hikes at every meeting this year than they actually go 50 at any particular meeting, because when you're
wants to push down 70%,
you don't want to just you don't want to basically slap the patient and hope that they recover, right, and get up again. So I think it's a real it's going to be a real challenge for the Fed to basically communicate that, hey, we're going to go regular, but we're also not going to go massively, right? We're not going to go 50 in March. Now, could they go 50, say, in June if you continue to get numbers like this? Yes. So I do think that eventually they might do a 50, but I think not as a first move.
Ira Jersey with us with Bloomberg Intelligence. Ira, the chart of the inflation-adjusted 10-year yield.
Yay, we got 25. So we lost 10 and got 25 back. There we go. Went on the sell. There you can see there, look. 668 now. So we took 3 losses, and that was purely my mistake again for not clicking quick enough, but I won it back and we won an extra 15 on top. So we're doing well. Really, that should be it, because like I say, 5 to 10% is all you want to do on your account.
10-year tips yields, and now we're right.
You can see now, look, when we're looking, this is what I was looking at. I'm looking at the.
So we're pretty close to that, but it's really that front end, like what's going on in the 2-year real yield.
Drop.
And the 5-year
Is this going to go below the RSI? 14, look, pushing.
Those have come back even faster than the 10-year has. And I think that's just a sign that the market does think that the Federal
to get
Reserve
2
is
more
gonna hike.
sells in,
When
you
they
never
start
know.
hiking, I think that real yields can continue to sell off significantly. And inflation expectations, longer term inflation expectations.
We did it, yes, got 2 more sells. Caught it before the heavy support. Got 46 and 20. Yay, we've got nearly another $1. There you go, look. Look at that. Another 2. Why did I take the trade? Because, look, I saw it break the zone, and we're down to our heavy support zone. And I just want to get out before it hits it, because it's RSI 14. That's what you got to do. It's like I say, it's like climbing down a ladder, and we're ready to climb back up. And look what's disappeared. That resistance zone has now disappeared. The blue zone. Telling me it says resistance, but it's not as heavy as it was before. So we're hopefully going to hit the support and get the pullback. This is great.
Scheme of things, we are in an environment where the Fed is catching up to reality.
So like I say, that's
strong, and we're seeing that in the earnings numbers. The vast
1,
majority
2,
of companies that are
3,
reporting
4,
earnings are beating
5, 6, 7, 8,
expectations,
9,
notwithstanding what we
10,
saw out of Meta
12, 13,
yesterday, or
16 trades taken and just 3 losses. And we're 757 now. So we're
importantly, companies are revising their revenue.
we're getting on for 15. We're 15% up for the day.
For revenue improve as the economy is much stronger than
We're
anyone
doing
had
really well.
anticipated and
And that's what it's all about, the percentage. And this just shows you we're a small account. When you catch the right news event, don't be scared of it. Try and learn how to trade it. Learn from me and Justin.
Extended as the Fed plays catch up to economic
Yes,
reality,
sir.
tries to get inflation
There we
somewhat
go.
contained. But in the meantime, we're going to have a choppy market. As you know, the scariest number out of the employment report this morning was the average hourly earnings number. I think you mentioned this, Tom. That is a very inflationary number, confirming what has been extremely sticky inflation. And we're seeing that reflected in margin forecasts. And until margin forecasts stabilize, you just won't see stocks reestablish a strong.
See, and I did the right thing, because look, it bounced off that support. And it's always a zone. I mean, yeah, I could have got an extra probably 20 cents. But is it worth it when you know this is a heavy support, it's going to bounce off, and it never quite touches? This is what you've always got to see with any system, doesn't matter what. It never, it's a zone, never touches the line nuts. If you set a pending order and put I shall wait for 17.95694, guess what? You just got stopped out. You know, so treat it as a zone, look, just above it, which is what we always do. And that's why I got in and got out. Now this could push back down again, but I'm watching the RSI, it's flat now. So that, to me, this could be it until the open. Like I say, with a 15% return on my investment.
The problem is, how much does the bond market adjust? Because if the bond market continues adjusting, that really depletes the equity risk premium.
I don't want to risk anymore, I don't want to risk it.
Earnings results to keep the equity risk premium somewhat higher. So I think we have actually embedded some degree of risk premium. The problem is the bond market is adjusting as well. And we do need to see earnings sort of offset that adjustment to keep stocks moving higher.
But Gina, everyone's been pointing to the bond market as the source of volatility, as the source of risk right now for equities, with the fundamentals looking pretty good. And then what we saw this week from Meta,
Looking to push down again,
from Amazon, at least in the pre-market trading, from Apple, from
with a nice rejection.
Companies that really, from Alphabet, excuse me, highlights
Fighting.
this degree of
There's like a fight going off now.
Fundamentals that is unprecedented. What do you make of that?
Yeah, I mean, I think that
like I say, remember, we can get back down to 1785. That.
Beat expectations, except for Meta. And the bigger story there for me, and
where we could be looking at, you know, with the open.
Analysts are really struggling.
What do you think, Justin? Think it will retest that?
These moving parts
clear all this?
much stronger than expected growth.
I can see us bouncing back up the neutral resistance, then back down, and then maybe back above 1800. But that might not happen today. We got too much bearish pressure.
toward the end of last year,
78.
that their business
Bearish and falling. 60% daily volume achieved.
Focus efforts going forward, but every other
Looks like it's pushing down again. RSI sticking at below that.
I think that that's the really big story still for S&P 500.
You're going to get the rest of your daily volume on the bearish side. I can assure you on that.
The trouble, if you want to find trouble in earnings,
Pushing down again, you say?
Inflation, and that's where we see some suppression to the overall economic growth reality.
Gina, I want to cut in here. This is a real sea change moment, folks. A 10-year yield showing the gloom of the pandemic and this natural disaster.
No sign of this retracing yet.
We are halfway back to zero. We have just breached a negative 0.500. A lot of numbers there. All you need to know is the 10-year inflation-adjusted yield is moving up rapidly towards zero. Gina, is that good for the banks? Is the great missed call here, as a lot of people say, the banks
NFP didn't alter gold as oil.
That this is the year for James Dimon. This is the year for Brian Moynihan.
Yeah, I think it's the year for value. Absolutely, it's the year for energy.
There's the pullback on the US 30. You see,
leaned a little bit more on energy as oil prices
just
also
starting now.
As we see very strong demand but very limited supply.
Again, all this
as well as alternative energy products.
Big news.
But that I will suggest that financials also are very well positioned in an environment where growth is strong, but inflation is also strong, and yields are adjusting. The trick for financials is that flattening yield curve. So while we see yields,
that's why you have to research which things trade best on which news events.
And that could be a little bit of a problem for financials. That said,
they say it dropped here, but now we've got a flat KG line there.
As long as we continue to see strong economic activity, they should be able to overwhelm that flattening yield curve. But they are value stocks. Value does tend to perform best in inflationary conditions like we have today, and in periods in which the Fed is increasing rates to catch up to inflation.
If it breaks this flat KG line, then we're going up, and then you've got another one here, and then you're up here. So again, you just want to see the RSI go green, get into the neutral. This is set up nicely for a buy on the open.
Absolutely stunning. Lisa, on the 2-10 spread,
I'm already kind of predicting that I can't trade it with my small account challenge, but that's what I'm thinking on this.
Percentage points, and that mark,
Definitely.
Lisa, as we just showed, the 10-year yield equivalent is 57.08. We're not there yet to an ever flatter vanilla curve.
Yeah, although you are seeing that with the gap between other yield spaces,
so we
like
could
7-year
well
and 10-year,
get
which
back
is something people have
to
been
that
watching
level, the
for a potential COVID version, less than 3 basis
3.5,
points separating those two
on the down.
denominations. I want to go back to something that Jeff
Again, it all
Rosenberg
depends on the
said,
RSI breaking
really
above, going green like it did here. Look, bang, take that buy,
we are moving
bang, catch
to
the
a
sell.
regime where negative real yields will no longer be
Bounce
the
off the
normal.
bottom.
That is Jeff Rosenberg of BlackRock's view, that the Fed, the other central banks are moving away. This sea change has unpredictable consequences on markets, and to try to get your hands around them really speaks to that noise or those huge swings that we've seen this week.
I would say an historic day,
Good.
but I'm not
Team
telling
agree,
the
it was
truth. It's been an
smooth. It
historic
was smooth at
48
NFP.
hours from London to Frankfurt. Thank you, Manus Cranny, for coverage from Frankfurt yesterday. And
Well
all I
done,
can say
everyone.
is today, stunning.
Guys, the team had some success. It was good. I say that was a good NFP result. You know what I mean? That was for us as traders. Probably, you know.
Do you remember when everybody told you to ignore it? They're not ignoring it now. A monster upside surprise on the payrolls report.
There you go.
Tire stocks
I love
lower
it.
on the S&P and on the Nasdaq too. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Brilliant, brilliant, brilliant.
From New York City, we begin with the big issue, a totally unpredictable payrolls report.
The January number, payrolls numbers, non-farm payrolls data.
Don't see the expected Omicron impact.
The question is it just an Omicron, kind of final pare back and hiring?
The labor market is extremely tight.
Or is it something bigger?
You've just seen the biggest sick out of your entire life, your entire career. That's all that is.
I don't think the number is going to mean too much.
We're going to ignore it the best we can.
One of the most difficult environments for the Fed to face.
With regard to the Fed,
I love it.
I'm not sure where I stand.
They're going to have to be very careful, you know, in these rate hikes.
And we're talking about 5.
We're at a turning point.
And 6 and 7 hikes. It's a little odd.
This report does a lot to continue to accelerate that theme of upfronting the pace of Fed hikes.
Well, they're not ignoring that number now. BlackRock's Rick Reeder joins us to discuss. Rick, let's talk about
Here's
it.
your man.
What a monster upside surprise.
I mean, it's pretty impressive, Jonathan. I mean, it's not just. I mean, every single part of this number was solid. I mean, it wasn't just the number of jobs, and across, by the way, every industry, virtually every industry. Construction was a little bit softer, but everything else was strong. The number of people, the household survey was tremendously strong, and then the wages data. I mean, boy, it couldn't be any more clear around you need to pay more to get people on board. You're starting to see people come on board. You're starting to see people, which I think is durable, will come into the labor force. But you got to pay for it, and you got to pay for it depending on the industry you're in.
That's what this is all about.
More dearly, and you're seeing that work through the numbers. But this was an impressive report. I have to say, you would have thought with Omicron, you wouldn't have been able to get as many people on board, but pretty darn impressive. I tell you, it's a bit mind blowing.
What do you say to people who have listened to this show and others all week, full of people saying, ignore this number, ignore this number? Why should they pay attention to it now?
You know, I think if the number was weak and it was soft, then you would have given credence to the idea that people were going to wait another month before going back to work. Employers were going to have a hard time, and they were going to take a bit of time.
He's basically saying, why watch this program when we get it wrong all the time?
And so, you know, this was, by the way, in a week where you saw the ECB and the Bank of England, listen, there should be no ambiguity.
Old
The
look, see?
environment is one of tightening policy.
Now our grid has changed. Let's go back to our trading, and you can see here, look, here we go. Now our neutral support. This is the pivot for the day, is what our grid is saying now. We changed. Now we've got a new heavy support. So we are looking. This could well be a retest. It is. I mean, it's gonna 1789 is on the cards. RSI 11. This is the key zone now.
A 50 basis point move at the March FOMC. Now, Rick, the Fed speak we've had going into this number doesn't jive well with that. I wonder what the Fed speak's going to say.
We had the little
coming out of it,
2 p.m. glitch. On your, there's your zone. So if you were selling now, this is where you stop. This is where you wait. It's telling you this is a zone, and the most you're going to scalp is between here and here, which is fine. You know, still 10 pips. Watch RSI. If it's curling up, though, we're going to get a bounce off this. So this is a good area.
Rick, sit there. Let's not run away from that line. That's so
just this news was so, I just heard it, just so unexpected. This really is pushing gold down.
467 on payrolls this month, 510 the previous month. And Rick, they're still doing QE.
I mean, it makes no sense. I mean, they should. I mean, quite frankly, they should just end it. And I think, I mean, as opposed to going 50 basis points, because, you know, some of the data that you've gotten this month has shown some moderation. Not today's, but some of the data has shown some moderation.
Is it going to push up? Is it going to bounce off this resistance?
You've seen some of the surveys showing some back
Zoom
off
in
a little bit. So, listen, they got to start moving. They've got to stop easing and through the balance sheet channel. And but listen, you know, do you go 50?
Nice price action. Look at that, bang, bar, took the buy there. Decided to come back down again. Now it's doing the same again. RSI 15 back down.
You know, you don't want rates to move that dramatically high, but you know, you've got other central banks moving. Then I think
we're going to get a little push up.
Got a window, and I think the Fed's going to take advantage of it. I mean, it's pretty clear. I mean, there was no ambiguity from Powell at his last press conference.
Yeah.
And you know, certainly you got to go. But you know, the fact that liquidity's going in today, that should be shut off.
If you're just tuning in, 467, the number on payrolls with a positive sign. Some people thought maybe a negative sign. Mike McKee, when I went across the mic a little bit earlier this morning, Mike just laughed. Mike, have you ever seen a number like this, one relative to what people expected?
don't know if I've seen one relative to what people expected like this. However, I'm a little less excited about it than when you first saw me reporting this number, because it looks like this report is a statistical mess. Let's take a look at the
Yeah, he's trying to get himself out of a hole. Hey, I got 34 and I lost 4 on that. There you go. I just took do 2 trades on that buy. As you can see there, look. Hoped up, so I got in on the scalp. And there you go. That loss was positive. It's because, again, I didn't click quick enough. But we're now $8, $7.98 up. But I got 34 there, so that's another 50 cents on the small account. This is great. This is like 20 trades now, just 4 losses. And none of them were losses because we got the direction wrong. These are losses because of my broker just, and this is what you have to accept when you're scalping like this, when you're dealing with a small account. You know, but we're up, you know, we're up $8. $8 from a remember we started on $49 and now we're up $8. So work that percentage out. That's a good.
It looks like we come out just about even. Then you take a look at the
can be done, team. It can be done. Slow but steady.
In the amount of earnings from people who get in higher paid jobs.
So if that was a $100 account, we'd now be $16 up. Brilliant. 16%. Perfect. That's how you got to relate it.
They only gained like 1 cent in the last month in their earnings. So this is a composition effect, and what the Fed's going to have to do
So
is
I'm
go
happy
back
with that.
and look month by month and put those average hourly earnings into the context of which category got which.
US 30 up, getting ready. Is it going to break? If it breaks here, remember, this is what I'm thinking for the open. For you guys who can trade the 30, probably, you know, getting on that. You just want to go for 10, remember. Got 50, so you got plenty of pips. Let's go, got 20 minutes to go yet.
So there isn't a big gain.
Gold, here we go, look.
The best thing to do here is to go back to
is it
the
going to
original
push?
Advice we had, which was ignore the report, except for a different reason.
Little
Mike,
pushback.
I cannot keep up this morning. Thank you for breaking that down. I appreciate it. I want to go through what's happening with the price action at the moment. Amazon's up about 11% in the pre-market. It's a monster move. It's a big, big move. Amazon is up and it's
Hey, we got 8 and 15. I got another 2 trades there on the buy as it came out of the red back to normal colour. Look, 26 as it came out of the zone. $8.29. I like to see. Here you go. Look.
Got a crude at the moment. Crude price is picking up.
Go.
Brent just short of 93, 92 on WTI. Got a real breakdown in the
There we've got another 8.
market as well.
There we go. $8.29 up.
Cross asset. Italian yields yesterday through to this morning. Look at it.
Says you can't
just this
overtrade.
slow grind higher,
I'm just following the system. You know what I mean? I'm not doing anything other than following the system.
With 10, 20% moves on an earnings.
RSI 28. Now remember, this is where your first level. You can see it's pulled back off it. That's why I got out again, because it's only going to go to this level here.
Firstly, I mean,
You want to clear this level to go to the next one, and then we know it's going to form a W.
You're talking about hundreds of billions of market cap shifting in a day for individual companies. The numbers are staggering.
Now we're neutral on our dashboard in terms of fight against the bull and the bears.
And put some perspective around it. Listen, we've got a process here where policy is behind. You've got to move policy faster. You've got some changing dynamics around companies. I mean, you look at the dispersion of these earnings reports that have come out.
RSI 29.
Number, the Microsoft number.
Again, you can measure. Look, even on this, you can measure what you're going to get.
Number. By the way, you see that in some other companies.
That's a
There's some
10
real
pips.
Dispersion. I think at the end of the day,
Nice little push up.
You've got to do in the way we're running our portfolios. You've got to be a bit smaller.
Wait for this to pull back. You see, hit that level.
Liquidity in the markets today
We get a
is
drop now.
amazingly thin. So you've got to think about, gosh, do I want to hedge a lot? Not really. I want to skinny down the portfolios, but then there's some opportunity here. I mean, yesterday, quite frankly, think about Amazon yesterday. It was down 7% on the Meta News.
Yep.
And you think about that was an opportunity yesterday. And, was there an overreaction? Markets are, because there's no depth of liquidity, markets are overshooting both ways. And so you just got to step back and say, okay, where are we going? Where are we going to be 2 months hence?
Yeah.
And then try and position around it. Not easy, I will say, because the whippiness of these markets.
So, Rick, are you carrying more cash?
I don't know if I can carry any more cash than we're carrying. Yeah,
So,
I mean,
what's the cash position right now, Rick?
I mean, we run a lot of portfolios, but we're running in portfolios, you know, over 30.
Brilliant. Yeah, we got in on the buy again. Awesome. Waiting on the buy. Is it again? It broke that level. Got in on the buy and I'm in and out. What did I get? Oh, I got $1. Yay! Look at that. Brilliant.
For the last few years, we've had this incredible support from the ECB.
I love it. I love it. Following the system is so easy. So there we go. As you can see, zoom out.
Levels that are well through where U.S. Treasuries are. You changing the paradigm.
There you go. So you can see the chart.
In terms of pivots. In terms of
Got 38 and 45, so now we're $9.41 up for the day. So that, to me, that's 20% because I started on 49.
And you've just got to be smaller in
your
expressions.
So Rick, smaller.
And now I'm 58.80. I need 20 cents, and we're 20% up on our account from where we started. And we've been scalping 45 minutes. There are all the trades, as you can see. Just took 4 losses, and again, none of those losses were due to directional. You get it wrong. It was just broker. You're not clicking quick enough, but yeah, it's a nice win. There we go.
It is a big deal. I mean, you know, I've
So
through that
$10 we're up nearly. Come on, can I get to $10 on the open?
So what do you do?
And I'll be a happy man.
On your show? I mean,
No positions open, as you can see. This is live on my IC markets.
And if you say, gosh, you know, they're still trading below book. They've got to kick.
And there's the pump. Look at that.
Of a better rate paradigm.
This is what we thought was going to happen.
Their ROE, return on
What goes down, what goes up. RSI pumping back.
You know, people have been piling in the U.S.
Gold.
Banks. You know, I don't think the U.S. banks
Back to 1800. What a surprise. I mean, Justin always say it loves that level.
You know, I'd rather just have that as a pure expression.
It's a magnet.
So I would say we still like the U.S. and we still think there are opportunities in the U.S. But there are parts of Europe that we think make sense. But you know, we're overweight. Our overweight will continue to be the U.S. I will say one thing that is interesting. Emerging markets had their tightening process last year, and EM has gotten pretty cheap. And it's now DM, it's now the developed markets that are accelerating. So the question is whether EM can outperform. And we've both in equity and debt, you know, we're starting to wade ourselves into that. You got to be careful because it's still hard in EM, but you know, we do think there's some opportunities in EM, both debt and equity. Again,
Get some resistance off of our baseline.
But I think there's some things to do there.
Hey Rick, just messaging Mohammed right now, who's very jealous he's not with us on the program at the moment. We're going to get him to phone in about 15 minutes. He doesn't want to miss out on this one. Rick, good to catch up, sir. As always, Rick Reeder there of BlackRock. On this situation with equity futures rolling over on the S&P, negative on the NASDAQ, all of this even with Amazon Taylor rigs flying.
You know, John, I thought yesterday after the closing bell with Pinterest, Snap, Amazon was wild, and then I woke up this morning at 8:30, and today is wild. But let's take a look at where we are with Amazon. We talked yesterday, right? Facebook wiping off $250 billion of its market cap. Amazon, they're about to add about $150 billion to their market cap. You're looking there in pre-market, still up about 12%. You want to talk about inflation? John, one of the key points of this report is they are raising that prime rate to $119 to $139. That's about $20. They've typically done this about every 4 years. But in my eyes, this is a clear sign that inflation is here and it is here to stay. Once you raise those rates, you don't cut them once inflation goes away. Let's also quickly talk about AWS. That was a really big point. That cloud unit, the most profitable unit of the business, up 40% year over year, 17.8.
Like I say, we've got a flat part on the KG line. We can draw a line across that, look, so you can see. And these are areas that we watch out for as resistance. We've got a zone, you see, minor resistance zone. So this is what we always watch out for, like that, you see.
Mohammed's going to join us on the phone. Mohammed Al Aaron, just moments
away. The zones.
We'll get him on the phone to get his thoughts on the payrolls report, what's happening in this market too. And we've got to talk about what's happening globally. All around the world, investors gearing up for a tightening cycle.
Significant change in rhetoric from central banks. The BOE, of course, hiked. The Fed is gearing up.
That's the flat line there, look, you see, on our baseline. So I always take note of that. So I'm not doing anything now. We're in a neutral zone. Obviously, if you break here to here, then yeah, we can take another trade. But we've got 10 minutes till the open now, so we want to be waiting. because I'm going to go in again. We'll go in again, see if we can get some more sell. It's probably going to push up, then push down on the open. So this is what you want to see. You always want to see gold or whatever you're trading, you know, go the opposite way to what you think it's going to be before a news event or an open. You know, I don't know where it's going to end up, but the RSI popping back out again. So
the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the financial services,
I'm thinking
he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve.
It's going to be more of a move on US 30. So for you guys who've got a bigger account, obviously get in on US 30. It's already started. See US 30.
After carefully taking, all the stakeholders into consideration.
I'd set out.
And I believe
You've got a zone there, so you've got to watch for this.
Quite cautious stance over the
Yeah, but you've still got. You're looking for 10 pips, 100 points, so with 300 there, so there's plenty of room still. But again, this will probably do the opposite to gold. Again, it'll just drop and pump up. There's your neutral line, which I'm set as a level to watch out for. When price hits this, breaks here, it's going to reverse or breaking up. Well, it's going to go up. The news was good. I mean, the news was good. It's solid. Just manipulation here, but well, it's going to be a good reaction. This is going to go bang on the open. I'll post that so everyone can follow. Obviously, I can't do that on a small account. If it did, one bit of drawdown, the game would be over.
Season continues.
Not since the 1980s have we seen these sorts of reversals.
I'd need another $1,000 to trade, so for guys with bigger accounts. But that's going to be a good trade. And you could probably get in on this a little bit early, but we'll stick with gold. As Justin said there, let's hit that resistance. It's got a peak on the RSI, which you can see.
To see a further modest
these peaks here, look, always 1, 2.
The Bank of England is ready to go again.
Not so much there, but these real, V shape, they're the ones you want to look to catch.
We're waiting for that. It's one of those numbers this morning that just grabs your attention. It's really sticky. 467 positive, 467,000, a monster upside surprise. 125 was the median estimate, but that really hit what was happening beneath the surface. Some people out there expecting a big negative print, maybe negative 200, maybe negative 400k on a payrolls report. It was not that. It was a massive upside surprise, and for that reason, Mohammed was going to sit out today. He's going to join us now. Mohammed Al-Aaron of Bloomberg Opinion and Queen's College, Cambridge. Mohammed, you couldn't stay away. What a surprise! What's your response, sir?
It's a huge surprise, and even if you try to explain it away, it's going to impact expectations in a significant manner.
Exactly.
It tells you that
try to explain it away.
Has fallen further behind the curve, and we are seeing fixed income markets price in the Fed having to do even more, and that in turn, John, is going to raise concern as to whether the Fed isn't already in the grips of a policy mistake, the second one in 2 years.
Let's be clear about what's expected right now, Mohammed, and the guide we've had from Fed speakers coming into this print. To some degree, they've pushed cold water over 50 basis points. We get an inflation print next week. I've gone through the estimates a couple of times, all through the sevens, from, say, 7 up to 7.6 for CPI next week. What are the chances, Mohammed, that they make a move bigger than 25 basis points?
I think it's 50-50. You saw that the Bank of England surprised this week when 4 of the 9 members of its policy committee voted for 50 basis points. That came as quite a shock to the market. At least the Bank of England recognizes, and they've recognized it early on, that they can't get this allow this inflation narrative to get out of control. The Fed is not there yet. It is not providing any forward guidance. It has lost control of the inflation narrative. And if it's not careful, the market is going to start pricing in something that goes well beyond what this economy can absorb.
Do you think we're already there? Mohammed, you've talked about that a couple of times, but you and I have
dangerous times, isn't it? Looks like he's saying the Fed got it wrong.
You know, we've always said that there is a window for an orderly normalization, but that window is small and getting smaller. Today it got even smaller. You know, if I was at the Fed, I would really worry about what I will end up contributing to in terms of undue volatility and in terms of undue damage to livelihoods.
So the will is tough because we don't have a crystal ball. We don't know what they will do. Let's talk about the should. Let's sit there just for a moment, Mohammed. Bank of America at 7 hikes for this year. There's a big pack at 5, others at 3. I imagine they might change. Where are you? What do you think they should be doing this year? And the kind of policy tightening that you think they can engineer with that window in mind that still delivers a soft landing?
So, John, I don't think this economy can easily absorb a bunching of 3 contractionary policy measures. Ending QE, raising
So if you look, if you measure here, look, you've got potential of 27 pips to the downside, 275 points, sorry, and you've got the potential of it coming up to 100 to 300 on the top side. So be prepared either way. Look at the neutral. It could bounce coming down, but it could bounce off our median line or average line here. But you can see the pattern. The pattern is how many times do we see this? This is what we want to see. This beautiful W pattern.
So it really comes down to a question of not
trading the wave.
Make a mistake. That mistake is being made. It is whether you can minimize damage. So I wouldn't go for 5 to 7 hikes. I think ultimately this economy can absorb about 3 hikes in addition to QT, in addition to elimination of QE. Anything further of that would be an over tightening. And that's
this is what it could be. Could go a little bit higher, could break and hit here before bouncing down.
Really kind with us this morning.
Or that in.
Mohammed,
Could come lower, could come all the way back down to. What you try to identify is the pattern that you want to be trading. So that's kind of, you know, my thoughts.
They are navigating in very treacherous market liquidity-wise. You've seen the moves. They have to do with quite a few structural factors. I put out a Bloomberg opinion piece on that last week. So you do not want to be forced out of positions. So just be really careful because we are going to see outside. We are, and we're going to continue.
Yeah, we're going to see a push up, push down.
And the most important investment.
Nice if we just catch a few more pips on this. If it looks dodgy, we won't. But it's looking good. It's looking good. It's hanging around in the area we want it to hang on.
For quite a few weeks.
Mohammed, thank
5
you,
minutes to
as
go.
always, for joining us, sir. We appreciate it. Mohammed Al-Arian on that big upside surprise on a payrolls report. Just trying to keep up to speed on what's happening in the equity market too. Down a tenth on the S&P, off the lows on the Nasdaq, unchanged now. We get lucky this morning. We get luckier. Anastasia Amoroso and Mike Collins join us now for their reaction. They're going to be sticking with us through the opening bell. Anastasia, just quickly, your response, please, your reaction to this.
Well, it was always going to be a surprise as far as the payrolls report was concerned, given the range of outcomes. And we got a positive surprise. I view that as a positive surprise that the economy is shaking off this pandemic and it's moving forward. But of course, I agree with Mohammed. I agree with Rick that the Fed is further and further behind and they're going to have to catch up. And I think it was Mario Draghi used to say that we do not pre-commit.
If this goes by, sell buy.
The Fed has pre-committed to raising interest rates, and they
you've got a bigger account, it's fine. You can put in orders each way. Well, orders, you can put in trades each way at the time. With a smaller account, I've got to get it spot on. So we'll see.
You really have to take these monthly.
And I might not trade it. We'll see. I'm happy with my win.
The work week hours fell. If you multiply the big number of jobs gains times the hours worked,
We could do with another 60 cents. 59 cents. Come on. Throw it across to me, Justin.
The maximum employment box, Jonathan. Check it twice.
Just remember, it'll burn you.
Hit that $10. Yeah. Well, the move's not going to be as big, you know, on this as it was on the result. Because it's just nice, nicely set for to hit this resistance and then come back down and then bounce up again.
Right, higher rates, end of QE, beginning of QT.
RSI is 50.
Fiscal contraction. all happening in like a 6-month window. This economy has never seen that.
You can look for 10 pips to the upside.
All at once. So you're going to continue to see the curve flatten here. Inflation expectations probably come down.
I don't know if you want to touch twos right now, given everything you just said, Mike. Do you want to buy 10s at 190?
You know, we're really still short twos, thankfully, right? That's the gift that keeps giving. We still have this big flattener on. But yes, we are certainly advising our clients, add duration on these sell-offs, right? In 3 years from now, Jonathan, long rates are going to be lower. That's a pretty high conviction view we have. In fact, right now, you look at what's priced in the market, hike. Actually, starting in like 3 years from now, the Fed rate, the Fed policy rate is actually expected to start coming down again already. So that's probably the most likely path.
Mike Collins, stick with us alongside the brilliant Anastasia Amoroso just to work through some of this price action at the moment. 5 minutes away from the opening bow. Looking at a bond market with a yield curve that's picking up again. Up 8 basis points on 2s to 127, on 10s up 6 basis points to 189. The curve just a bit flatter, but the whole curve shifting higher. In the equity market, futures look like this, unchanged on the S&P, on a Russell slightly negative, coming down a tenth on the Nasdaq, up 0.2%. We need to talk about oil too. Crude at 1.8 to 92.75 on Brent to 92.10 on WTI. And we have to talk about some monster moves in this equity market, from Snap to Amazon. Big tech doing its part to erase the Meta earnings meltdown. That's all coming up from New York City this morning.
Should have bought shares in Snap today, eh? 50%. Crazy. Gold where it needs to be, look. We've got 1 minute to go. Let's see what happens. There we go. "30 seconds to go." It. Got push down.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737.
Brilliant. Got in on the down, on the sell, in and out, as I said. And we got another 60. So we've done it. $10 too. That's it. Open's done. That's our quick, guys. I said it was going to be a sell on the open. Brilliant.
Yep.
There you go. As we said. Again, if I was doing a bigger account, you know me, I would hold a little bit longer. But obviously, I just wanted to get to that magical $10. So up. Yay. That's how you do it. Just to show you. There it is. Oh, where is it? Hold on. Oh, yeah. There we go. Here she is. Bang. That's all the trading for NFP and the open. There we go. $10, 2 cents. Yay. So 59.48. So there you go. So that's a 20%, 21% thereabouts increase on your account. So obviously you can just relate that to any account size. You know, if that had been 100, you know, you'd be 20. And if 1,000, you know, it'd be 100. So that's how you can do it. This news event is significant, especially when they get it wrong. But you've got to learn how to true scalp, and there's my results for it, and that's it. So just 4 small losses there. One, the biggest loss was about 60 cents there. Look, as you can see, all covered, and they were purely my fault. And that's it. Like I say, usually I would do 4 or 5 trades on the open, but obviously not with a small account. It's the whole idea. You just got to use your mind. You trade the same way, but your mindset's a little bit different because you just want to protect the account. And there it is. That's the open. We're keeping track.
Day done.
We're keeping track.
On the equity market right now, futures slightly
Yep.
negative, down almost 1% on the S&P. On the Nasdaq,
You say, is anyone keeping track? We are.
than a tenth of 1%. And Amazon, of course, up
Definitely.
a lot more in the pre-market. There's the opening bell. Get straight to it. Let's get to the bond market. 10-year yields look a little something like this on 10s.
There's no news. That's it. That's the, for me, that's the last trade of this week. And it's been great. It's been fun doing the small account challenge as well. We're going to, obviously, we'll continue with it next week. I'm going to try not to draw that out. That's a nice meal tonight, $10. Thanks, NFP.
Gin and tonic.
It is, yeah. That's a nice McDonald's for the family.
Yeah, there you go. There you go.
Oh, love it, love it. But I just, you know, we're doing this just to prove, you know, because a lot of people think, hey, it's easy with a big account and blah, blah, blah. You know, but if you can't get it right with a small account, you can't get it right with a big account. Yeah, you can hold more drawdown and you can risk more by holding more drawdown. But if your analysis is wrong, then you're just going to lose, you know what I mean? So all I'm following here is the rules that we follow every single day we trade. Nothing different. We do this NFP every month. We do the same thing every time. And this is what it's all about. It's a repetitive. When it starts becoming repetitive, that's when you start to win. When you don't know if you don't know what you're doing from one day to the next, in terms of trading, what you're trading, when you're trading, all the rest of it, then you're going to lose. It needs to become systematic. And I hate systems. I hate calling it a system because it's not, but it's about the only thing that is systematic in my trading is I do the same thing over and over. Everything else, you know, it's up for grabs, but, you know, we trade this the same way we've traded it every single time. So this could come down a bit more, but we know we're looking for a W. We know we're trading a centre leg W here, and we really want to kind of catch at least back to 1805, if not back to 1808.
Very quickly then into my Bloomberg terminal and look at this chart. Meta trading at a 35% discount to the Nasdaq 100, right? Its lowest relative price to earnings on the Nasdaq 100 ever. A lot of names on the street cut their price targets in the near term, but maintained their bullish outlook. I then go back to
Snap. Now, wait.
Look at what Snap's trading at now. The narrative around advertising is strong broadly.
You've got to wait for buys now on gold.
So there's a lot to unpick here on what went wrong. I still don't think we've quite answered that question. But I ask you, John, is big tech back? Maybe.
Amazon is a fair bit, at least in early trading. Ed, thank you, sir. As always, it's a move of 9.4%. That 9.4% for a stock as large as Amazon is worth $134 billion. Dan Ives of Wedbush says this: multiples will compress, but the underlying growth for the tech space is being underestimated and will thus neutralize some of these perceived Fed tightening headwinds. We can get into this. Anastasia Amoroso, Mike Collins.
Again, at the moment with gold, you wouldn't do anything because you're on a trend line, we're in a neutral, we're on the wait for it to pull back down again. Well, it goes back up, so you just got to wait. Let's have a quick look at US 30. And US 30, there you go, look at that. What did I say? US 30 was a nice buy to our neutral, and that was spot on. So if you had a bigger account, you should have gone in on a buy on US 30, look, bang on, straight up, and it's dropped. But you know you're going to get drawdown. But it's going to hit that. It hit what we said. Look at that. 3098, 3518.
They have to re-engineer for the next phase of growth, and that's going to take some time. So that's why some of those stocks have been beaten up and they've dragged down parts of the market. But I'm very encouraged to see that part of the big tech cap trade is still very much on. And whether it's Amazon, whether it's Google,
that was based on the news.
They're having problems, but there are parts of tech that are very
strong. Oh, thanks for
stronger.
With that daily compounding calculator, very good.
As much cloud capacity as we've added.
That's what I utilize whenever I'm doing the 10% strategy.
And that's what a lot of
and that's everybody can use that. It's daily compounding, weekends excluded. Don't deduct the weekends from the time. But base at 10% off of the year, you can take a $50 account to $100,000 in literally no time. But you've got to be religious with it. You get your 10% and then you get out.
Yeah, I've already blown that today then. Did my 20%.
Yeah.
Sorry, bro.
And it's good. It's good to have that as a baseline. You know, hey, this is my profit target for today. You know, I'm getting my 10% and I'm taking it to the bank. It's really, really good.
Yeah, no, honestly, if you've got something like that, That's a really good way. And you know, that's what I do. Anything I win on my bigger account, I take out at the end of the week. And that's what you got to do, is pay yourself. You know, take it. Don't leave it in there. Just like you say, compound it. Also take some profit off the table as well. You know, get that.
A lot of that plays into the psychology of it too.
Yeah.
Once you start paying for things and it becomes like it's the actual earnings, you start treating it like a job. You're a lot more religious with it.
Yeah, that is absolutely right. Yeah.
Tech names that are not working as well.
But starting today with a $50 account, you could compound it to just over 50,000 by the middle of May.
Change of perception
there you
around
go.
social media.
And that's powerful.
Social media that collects your data and doesn't give you a whole lot of data privacy.
Good. Thank you for sharing that with the group. Everybody will be able to look at that.
Web 3.0
Yes, sir.
It says it's useful for Bitcoin and other cryptocurrency trading as well.
With
Mm-hmm.
data privacy that is going to be more stringent, and obviously Snap has done a better job of this than Facebook did. With
It's good to give yourself a baseline or at least a target. That way you're a lot more responsible and conservative with your trading.
Yeah.
I think those companies are going to continue to
See here, look, the W's forming nicely. We said it would hit the baseline and just range along a bit, so it's either going to drop down or break. So you just got to watch out for that if you continue watching gold. But yeah, I might try it next week. I might
yeah, absolutely, Jonathan.
have a go. Now I've got to wherever I am, $60, starting with $60.
Reaction function to that, and other central banks' reaction function, and the impact on real rates and the impact on risk asset valuations. It's all feeding through. They're all.
I'm just going to print my results into the group.
Expected to see credit spreads widen here, and along with equities valuations coming down as more rate hikes get priced in, as tighter policy gets priced in. Right, it's almost a one-to-one relationship, and that has happened in a pretty big way, right? I'm looking at this investment grade corporate index, and it has been widening pretty substantially so far this year, starting last year, right? So the question is, when do you get back in, right? When is the opportunity to add risk, whether it's in investment grade corporates, high yield equities, or maybe even emerging markets? And maybe you need to see inflation indicators start to peak and roll over, which we haven't seen yet. And maybe you need to see the peak hawkishness of these central banks start to ebb. And we're not really that close to that yet. So we're being patient on the credit side.
We might have to wait until Q2 and hold that thought, because I want to come back to you on credit. So we've got Amazon up by 9%.
Oh, yeah.
Makes up what of the NASDAQ 100? I think 6 or 7%. There we are, about 7 percentage points of the NASDAQ.
Yeah, that's good, that calculator.
And we've still got the NASDAQ lower today.
Mm-hmm.
The composite, the NASDAQ
I like
down
it.
a 10th on the S&P.
It's my little cheat sheet.
Katie Lyons, keep up with this
Brilliant.
one.
Cheers for that. Brilliant.
It's
Yes,
very,
sir.
very difficult to do, John. Of course, Amazon, one of those companies that benefited
Especially,
in a way from the pandemic.
especially whenever you're trying to grow a small account.
Wonder if I can pin it into the group.
Yeah, you should be able to. Especially if you're trying to grow a small account, it helps to be really religious and really strict with your rules. And if you can set it at 10% and you develop that habit over time, that's muscle memory. It's 10%, we get out of the markets. 10%, we get out of the markets. That really helps for your trading psychology.
Obviously, the company hurting as the economy opens up and people aren't spending online shopping dollars as much and using PayPal to do that. That has brought the stock back down to earth. And I would note, John, PayPal actually used to trade at near double the forward PE multiple of the NASDAQ 100. They're now roughly in line. But at 25 times for the NASDAQ 100, that is the lowest valuation for that index as a whole, going all the way back to May of 2020. Still, though, that is 30% above the 10-year average. So it goes to show you, John, even as we've seen a lot of these tech names, a lot of these stay-at-home names coming back to earth.
Yeah, a $50 account, May the 18th.
And for everyone just tuning in, big upside surprise on a
If you hit your 10% for that day, you'd be at $52,000 in roughly 4 months.
Went through a little bit earlier that's worth paying attention to, but big upside surprise and big move in the bond market too. 2-year yields up by 9 basis points, just short of 130 at 129, through 190 on 10s, up 7 basis points.
Brilliant.
Chris Harvey of Wells Fargo, almost called him Chris Fargo, has this to say.
Gold breaking now. There you go.
The tide will no longer lift all
Broke
boats,
the
and the
trend
market
line.
will become less and less forgiving in our view. Going forward, we feel investors will need to cut losses quickly and to focus on margins rather than the top or bottom line. Anastasia, can I throw that at you? Margins.
It caught support right there at that 1800 area.
2021. Can we repeat the act in 22?
I think it's going to be hard. We certainly should not expect any upside in margins, and I think some industries will fare better than others in terms of preserving their margins. I mean, some of the sectors I'm concerned about in particular are consumer staples and some of the consumer discretionary names, because
Now it's going to bounce. This is the center of our W.
to start off with, and also as wages continue to rise, and we just saw a 5.7% increase in wages, those margins are going to compress. And any company where the revenue per employee tends to be very low, I think is quite susceptible from this trend. But if I look within other pockets of the space, and once again, I have to steer to software here and parts of the technology, margins for that sector are very, very high. For example, for the infotech sector, the margins of 24% are actually double that of the S&P, which is roughly 12%. So that gives you a lot more room to absorb, whether it's higher wages or supply chain disruptions and so forth. So that's why I think on the days like we had yesterday, investors can't help but pivot back to tech. And
Right, that's it. Yeah, just wound that down. Like I say, I'm more than happy with that. 20% will do on the small account.
And the economy slows down somewhat, it's going to be
Flick back to the bigger account for want to do any more trading, but happy with that. That's good. Really, really, really happy with it.
Secular trends that are playing out in tech. And John, if I
now we'll wait and see. I'm just checking on
being more discerning in the market, and I do agree. I think it was Rick who said this, that this is becoming a more narrow market, and we can't
DAX.
bet on
I'm waiting for as well on my bigger account for DAX just to pull back.
More select and
big drop off.
Pockets of alpha.
Mike Collins, I'm just
Watch
getting
that
some
from London Open.
response from Scott Minard over at Guggenheim. He's just sent me a personal email. He's okay with me reading this out. I thought I'd share it with the audience. Here's his view. The Fed will be forced to tighten aggressively just as the economy slows from the lagged effect of stimulus runoff. Risk is increasing that just as the economy is slowing in real terms, the Fed will be finding inflation.
Yeah. Interest rates could be high, mate, next week for America. Oh, yeah.
There is no way out of stagflation.
Yeah, definitely.
So that's Scott Minard of Guggenheim.
There you go. There's your US 30. Look at that. See, I told you, for those who were doubting a buy, there's your buy now. All to do with the NFP.
Your reaction?
Yeah, so that's a world where demand slows.
Beautiful. Re-entry now on the RSI, and you were clear there for, look at that, 10, 20, 30, 40, 50. Beautiful. And US 30. Damn.
From the supply impact. Interestingly, demand has accounted for actually.
Like I say, it's good because it'll help push DAX up.
We've seen, right? We have this huge fiscal stimulus, helicopter money, demand for goods surged an incredible amount. No supply chain in the world can keep up with that. But now, as we look at these indicators, the demand side is rolling over, albeit modestly, meaning the growth rate of demand is starting to come down, and the market focuses on second derivatives. And the supply side, believe it or not, and you're seeing a lot of anecdotal evidence in the last just few days, is starting to come back. So that supply and demand is going to meet at some point. The question
looks like gold wants to try and break that little traffic area it's got up there.
Probably in the first half of next year.
See it reject here, probably back down to 1802 area, and then back up.
Stuck in this permanent high inflation world.
I'll revisit that line from Scott Minard at Guggenheim in just a moment. Anastasia Amoroso, Mike Collins, sticking with us. We're here from the White House a little bit later this hour. We need to talk about crude with them. We need to talk about crude next, hitting a fresh 7-year high.
It's even beyond just Russia-Ukraine. It's also the longer-term ESG initiative. You know, I think as we're turning more green, we're going to have to live with higher oil prices.
That conversation up next.
I think that's it. That is it. We're watching gold now on its way back up, as we said. That's little W, second leg, pulling back 1806, hitting that zone there. Should get on a buy on here, bang. And again, I was doing a big account, I'd be in, but like I say, like Justin said, you got to stick to your plan. 5 to 10% is more than enough. I've done 21%. I'm not going to risk it. I don't need to risk it. That's it. There's more trades again next week. So that's what you hang on for, you know.
No FOMO.
That's it, yeah. I don't get that anymore like I used to do, but that's just experience.
Henry Kissinger and Bill Gates. Who's smarter?
Each would say the other guy. And I think
You get burned a couple times, and then you'll start to realize that you're not going to miss out on anything. You take your profits and you take it to the bank.
Yeah, that's it. You got it.
It's almost the end of the year.
You got it.
Bali is still quiet and empty.
I was actually having this conversation with another one of our group members the other day.
Yeah.
Well, why aren't you trading? Well, you know, I've got things going on. I've got appointments. I've got work. You know, I'll pop in whenever I can, and I'll get my 10%. But if I can't devote the time, effort, and energy to it, then I'm not going to trade, because it'll ultimately end up burning you.
Yeah. Like last night, look at that. I just did 2 trades last night, that hour. If that's what it is, that's what it is. I've done 24 trades today in the space of, what, 1 hour, 90 minutes. And then we did 2 trades in the space of an hour and 20 minutes last night. Like, you're quite right. That's it. There's not always a trade. There is a trade, but not always so many. You know, so you're quite right. You've got to be disciplined. Disciplined, that's the word, isn't it?
That's it.
So, like I say, if everyone who's watching, you know, give us a like this, give us a like on the channel, stream, subscribe, share, tell people about us. And more importantly, if you want to have us as your mentors and join our group, then go to the website www.mohawkforex.com. Everything is in the description below. But that's it for another great successful NFP traded by the team and using our true scalping and axe trading system. So for everybody out there, have a good weekend, stay safe, trade safe, and we will see you on the next live stream. And thank you for Justin for joining me from the States. A pleasure as always.
Yes, sir. Always a pleasure trading with you, brother. Everybody trade safe. Cheers, and we'll catch you next week.
Yeah, take care all. See you later.